Sandip Sabharwal joins in on the show right now. Sandeep, hi, good afternoon. Good to have you on the show. Disadvantage Kotak is turning out to be advantage more so with good numbers from Axis and the entire PSB Bank pack. Sandeep is holding out very, very smartly. Look at SBI right now, solid 4.25% move. The smaller ones as well holding out well. What is it that you've made of this incident with Kotak and of course numbers from Axis as well if you've taken a look?
So Axis numbers are very strong, and I think Axis continues to be one bank which is, I would say, unfairly cheap relative to many of the other large private sector banks. It trades at valuations which are 40% cheaper than HDFC Bank as of yesterday. Today, maybe it's 35% cheaper than HDFC Bank. When on most parameters, it's doing maybe as well or better in terms of gross NPAs, net NPAs, provision coverage, return on equity across the board. So I believe Axis Bank results actually stood out, and this should be one stock which needs to get further re-rated higher. It trades at 1.8 times book, while most of the other large private sector banks are more near 2.7 to 3 times. So I think this process should continue. Public sector bank rally, tough to explain at this stage because it's not that any loss of Kotak is going to turn out to be a benefit to the public sector bank. So I think it might be just a one-off thing.
11.25 thereabouts, Sandeep. Would you add more to Axis Bank after looking at these numbers?
Yeah, I would think so. So as per my analysis of the valuation at which the bank should trade, I would think that another 20% higher on Axis Bank over the course of the year should not be an impossible task.
We heard from Nitin Agarwal of Motilal Oswal as well when we spoke with him, saying that not only the results but the fact that the MD and CEO has actually got the extension is also something which will result in that re-rating of the stock. But apart from the banking names, Naresh, your view on the market mood right now? Very strong momentum at our hands, and of course led by largely banks. But what do you make of this? Largely an expiry related move or move towards that all-time high level?
So for a change, we are seeing a uptick on the heavyweights and the indices and not on the small caps. So a strong move, a little bit of expiry move to it. But the fact that you're hitting new 52-week highs and all-time highs in some of the names. So you have Axis Bank, SBI, as well as ICICI, all the three hitting new 52-week highs and all-time highs. That's clearly a very strong signal. And the next one to watch out for is if Reliance starts crossing 2980, that gives a fillip to the whole basket of heavyweights. So the trend is very clear. Now, one could keep a stop loss at today's low and expect a ride up. Overall, the heavyweights have finally started showing momentum. So the bank's leadership is clear and they look interesting.
A very quick break. When we come back, we'll continue discussing all the buzzers in trade with Sandip Sabharwal as well as our chartists. Back with closing trades right here on ET Now. MCX holding up 8.5% right now. There's Bharat Forge, which is strong by almost 8%. Axis Bank, like we've already been flagging off, that's enjoying the pole position on the Nifty right now. Over a 6% move. SBI going very strong. And then AB Capital as well holding out very well. A solid 6% move coming in there. Sandeep, what is it that you're making of all these announcements coming in from the Aditya Birla Group? And the stock price is pretty much reflecting all of that, be it the move in Vodafone, AB Capital, Grasim, etc.?
I think the moves, I think, could be related to some sort of relief, given that Vodafone Idea has been able to raise equity. And to that extent, people believe that the pressure on the entire group will ease off, which it should. I think it could be a reflection of that. Specifically on, I think, some stocks like Aditya Birla Retail, it's more to do with the announcement of a demerger, where I think the Madura Garments division, the company which hosts that, I think that could trade at a significantly higher valuation as as compared to the combined entity. So I think that's got reflected in the stock price of Aditya Birla Fashion and Retail.
Taken, just wanted to flag off the numbers coming in for ACC at the bottom of your screen. On the consolidated basis, the revenue has come in better than expectation at 5,400 crores because our expectation was close to 5,060 crores. A big beat when it comes to the profitability. The profitability on a consolidated basis has come in at 945 crores. We were working with an expectation of just 470 crores. So there's a large beat on the bottom line, and this despite the fact that the margins have been a bit soft on a quarter-on-quarter basis. The margin has come in at 15.5% as compared to over 18% last quarter. And even if you look at the expectation, the margin expectation was close to 16.4%. So slight miss on the margin, but if you look at the top line and the bottom line, it's very strong. So let's wait by and see as to what worked for the bottom line, because there might be a bit of a one-off in terms of either taxation or any other income. So we'll watch out, but overall it looks like it's a good set. But since we're on the subject of cement, Sandeep, a lot of news flow there, whether it's of course the commentary coming in from Dalmia Bharat about the pricing pressure, Orient Cement, wherein ET sources have told us that the AB group might be looking at picking up the promoter stake there, and then of course numbers from ACC as well. What's your view on the cement pack?
I think cement is a sector where we need to be cautious of. Valuations are pretty high and pricing pressures are very significant. Companies have been trying to increase prices for the last 8-9 months, but they've been unsuccessful. Dalmia Bharat also has indicated that they don't see a pricing recovery anytime soon. Even ACC results, I think some extraordinary must be there because margins have taken a significant beating. And margins would actually decline further going forward as the prices remain under pressure and costs have bottomed down now. So cost pressures could come in going forward. I think it's a sector we need to avoid for the time being. As valuations correct, then we could look at it maybe a few months later.
Exceptional profit of 230 crores, and that's the reason that profitability is looking very strong. So that explains it. There's a bottom line impact of 230 crore, which is resulting in that big beat on the profitability. Margins are smidge lower, but the top line has been something which has been maintained. That's the latest on ACC, holding up comfortably in the green. But apart from ACC, as we pointed out, it's also about Orient Cement. My colleague Priyanka is joining us to talk to us about what exactly is she picking up on the sources and the deal which might be in place with the AB Group.
So what we have learned is that Aditya Birla Group is in advanced talk with Orient Cement to buy the promoter stake. Promoter holding the CK Birla Group along with some private investment vehicles owns 37.9% stake in Orient Cement. So as per the current market cap, the promoter stake could be at 1790 crore. And if the deal goes through, Aditya Birla Group will need to make an open offer. Let's understand the financials of Orient Cement and the key areas they cater to. Orient Cement manufacturing units are located in Telangana, Karnataka, Maharashtra. They have exposure in southern as well as their western belt. But they're also exploring newer markets in Northern Belt, Chhattisgarh, Uttar Pradesh, and even Madhya Pradesh. This is about the key areas, but talking about the financials, Orient Cement, which total capacity stands at about 8.5 metric ton per annum. Their EV to EBITDA basis is 7x. Orient Cement currently is executing a 2,000 crore capex for expansion, and recently they've transferred limestone mine lease in Rajasthan from Orient Paper to Self. Rajasthan mines have estimated reserve for 40 years, around about 120 million to 150 million tons is the capacity. And Orient Cement's 1/4 energy needs to be met by renewable energy. This is about Orient Cement, but talking about the larger players, since we understand there's a consolidation happening in the cement industry, where the smaller players are the potential merger and acquisition candidates. Bigger players are continuously increasing their capacity. In fact, they have aggressive capacity expansion plans. Talking about Aditya Birla Group's combined cement capacity, which stands at 180 million tons per annum, and talking about individually for Ultratech, which sets a target of 200 million tons per annum by 2030. So big players are on an aggressive expansion plan, and smaller players are potential M&A candidates. ET Now did send queries to both Orient Cement as well as Aditya Birla Group, but they went unanswered. But this, if deal goes through, then an open offer is likely to come.
Okay, that's all the buzz that we're picking up on Orient Cement, and cement has been quite that sector where a lot of M&A seems to be at place and has already been also in the past. But in the meantime, let's just take stock of what else has been happening in the market. And I want to just focus on what the laggards are up to. Unilever, of course, the results were muted, although in line with anticipation or expectations. That stock hasn't seen any improvement there. The Tata Consumer as well, down about 0.5% right now in trade. And of course, Kotak continues to be the drag. And there is no resurrection for LTI Mindtree either. Sandeep, in this kind of a market, would you give FMCG a skip right now? Because so far from the managements, there doesn't seem to be any clarity that there is any across-the-board recovery in rural demand taking place.
Yeah, I think, but that's the reason why most of them are at 3 to 4 year lows or some even lower than that. So I'm actually looking at opportunities to add to this sector. Now, waiting for some better price levels in HUL. So HUL, I think, could be interesting, another 8 to 10% down, because at that price, it will be trading at multi-year low valuations. And we need to realize, Aisha, that this is one sector where valuations always are high. And when the volume growth actually kicks in and the companies start reporting good numbers, the prices could be much higher. So we have to buy them when the news flow is negative. So I'm looking at the sector, looking to buy some stocks here, but not yet buying.
Kunal, do you see that 8 to 10% fall in HUL coming anytime soon?
Well, not as of now. It doesn't look like on the charts. In fact, I believe that the indicators, most of the indicators are actually oversold for HUL. And then when I look at the other, related, stocks from the related space, the likes of Britannia, Nestle, Colgate, of course, is trading at a fresh breakout for itself at a multi-month high. But I think many of the other stocks are also showing signs of a very similar kind of a bottom formation. So I would probably believe that it could be actually a very good time for medium-term traders who have a time frame of say 6 months, 1 year plus, to try and chip into these kind of stocks, because when these bottom formation patterns happen and when these defensive names get into an oversold territory, which is very rare, it's like once in 3 years, 4 years kind of a phenomena. They may spend some time over here in this lower in the price trends, but then when these stocks start to move apart, they come back to their previous multi-year highs and start off a major multi-year uptrend. So I think it's a very good time to try and chip into these names.
Okay, point taken. But Kunal, I wanted to flag out some of these stocks which are sitting at all-time high levels, whether it's MCX, which is up 8% at all-time high level, whether it is the likes of Eicher Motors, which have been having a good run for the last few days, or the likes of Cochin Shipyard, Garden Reach, which have been doing quite well throughout the week. If you had to take one bet within these names, which chart gives you the confidence that it has the highest amount of upside from here on?
Do I have the option of taking another one?
UBL?
Fine.
Let me guess.
I'll take AB Capital. I think that's a stock which I'll be very bullish on, and I think it's already sitting at a multi-month, multi-quarter high. But even at 225, 228 odd levels where the stock is trading right now, I think the momentum is quite strong enough for the stock to even scale past levels of 265 to 270, possibly in the next couple of months.
Okay, so that's the take coming in on AB Capital. That's one stock that Kunal is flagging out with the kind of returns he's expecting on that name. Separately, we're watching out for what's happening to Bharat Forge as well. Great amount of momentum there after that Bank of America upgrade coming in. And the question is whether this will trickle down to the rest of the auto peers as well and the forgings companies, whether RK Forgings, etc. What would be your view, Sandeep, on that and this upgrade that we're seeing on Bharat Forge?
Bharat Forge is very well placed because of its diversified product mix now and what their initiatives they have taken in various fields, especially defense and aerospace, etc. Oil and gas is something which was subdued for them but could come back. However, I think all these brokerages coming out with results just few upgrades or downgrades just few days before results makes no sense. So I think we need to watch out for what the company says. Their longer term outlook is good, but in the near term, I think the valuations are not cheap after the kind of run up it's seen. So we also had bought this stock around 700 odd level, but we exited last time it went near 1300 and we haven't bought again. I would like to wait for valuations to be more reasonable.
Your view on the market right now has been that it's actually the global market strength which is supporting the Nifty, and the upside looks a little bit capped, and one should place higher bets on the broader markets in small and mid-cap names. Give us a list of 2-3 names, or even more than that if you wish, that one can look to buy within mid-caps right now.
Unfortunately, Aisha, what's happening is that the mid caps which are doing well and which have done well, I think the prices have gone up so much that it's tough to even buy those stocks further. So some of the stocks we hold, like for example, V8 like WebAg, that's gone up substantially, or Voltas, or some of these companies. So I think it's tough to buy afresh. Where I think there's still value could be stocks like VIP Industries, which I think also on the verge of turnaround, and where I think returns could follow something like what happened when Lupin turned around, or something like Voltas turnaround happened, the returns which came. So I think that's something which could looks interesting for with a 1.5 year perspective. Consumer durables have been doing well. So on that, from a very conservative group, V-Guard has done has given some returns in the near term, but not substantial. I think that's where, if results are decent, we could see some upside there.
Point taken. Consumer durables clearly looking interesting. Thanks so much for making time and speaking with us today, Sandeep.
If you like this video, then like, share and subscribe to ET Now.